Alright, so I got another video for you guys today. So today we're going to be talking about what is a ETF. I get that question often, and an ETF is an easy way for people to get started with investing. ETF is an exchange trading fund. It's a collection of different stocks all put into one pie for you, like one bag for you. Makes it really easy. So if you're not really sure what you want to be investing in, you can grab something like the SPY or SPY. It has all the top 500 companies in it already, like you got Microsoft, Target, Amazon, all those guys already in there, and they're managing it for you, or they manage that ETF and take out companies, put new companies in, that kind of stuff. So you're not having to actively manage and trade anything. So it's not like you buy an Amazon stock and then you got to sell it at a certain price, and you buy some Tesla, then you sell that at a certain price. You're not managing anything. It makes it super easy. You just buy SPY. All those stocks are kind of in there. There's different percentages, so you may be getting like 5% Amazon, 10% Microsoft, 2% Meta, that kind of thing. But in the ETF in the bottom, you can actually see what's inside that ETF, and it makes it super easy. But it's much better than trading an individual name, especially if you don't know what you're doing. So if you grab some Tesla right now or some Microsoft right now, it's at the top, it drops down, you end up selling, and then you lose some money when you could have just held the SPY. Hold it for a long time. They're slow movers, but they're always going to trend upwards. And then, I mean, you may get a slight pullback, such as the war stuff kind of going on, and then it brings it back down to a solid area, but then it goes right back up. And it's always going to be trending up as long as the market's going up. And then you can also use the SPY as a learning tool. So if the SPY is going up, most likely your individual names are going up, and SPY also dictates the market of what's going on. So you can use SPY, IVV, VOO. Those are just common ETFs that a lot of people purchase, and they're good. But there are some other ones. I've mentioned SCHD. If you've seen my top under 50 stocks, that one trades about 25, and it's actually the high dividend yield company. So if that company gives over 10% dividends, that gets put into that ETF. And then so when you get your dividend payout, and you're making a lot of money off the dividends, but maybe not the stock movement itself. But if you got any other questions, let me know. See ya.